Florida Talk Real Estate has been your local one-stop real estate shop since 2012. Get the advice you need from your local real estate pros.
Yeah. There's a guy, John, that I'm going to, when I come back to work on Monday, I'm going to talk to you about. Really big fan of the show, really great guy. You know him, Johnny. I know you talk to him a lot on the phone. And John owns a house and he has a pretty high 4% interest rate. And I was like, you got to talk to Mike. This is because he's going to stay in that house forever. Very, very happy with the house. I'm like, you got to talk to Mike. But it dawned on me, he wasn't sure he wanted to. And I think I realized why. And that's why I want to talk to Mike about it before I talk to John again, is because I don't think he owes much on the mortgage because he's owned the house a very long time. And the other thing, so I think he has a very small principal. So the cost for refining and the saving of the interest rate, when you have a very small principal, sometimes it's not worth it, right, Mike? I remember you talked to somebody else about that like last year or something. Even though they had a high interest rate, their principal was so low. They only owed a short period of time on the loan too, if I'm not mistaken. I think they only owed 8 years on the loan or something.
I talk to people about that. I kind of use the car analogy. Like if you go to get a car loan and they're offering you, 5 years at 6% or 5 years at 5%, like that's not a huge amount of difference that you're saving in interest over the life of the loan, right? If you were to do that amortization for 5 years, 1%, yes, you want the lowest possible, but how much money are you actually saving? And if I told you it's going to cost you money to realize those savings, and it becomes even narrower, right? The savings, right? Because there were costs associated with doing it. So it's that's another like aspect of almost every refi conversation I have, Jim, which is it one goal could be lowering the payment, right? Like budget is really tight. I just need to have this payment as low as possible so that my income, my resources go towards my life rather than my mortgage payment. And so that's one goal. And usually you accomplish that goal by getting the lowest interest rate possible and then stretching out your loan for as long as possible, right? A 30-year loan is going to have a lot lower payment than, say, a 15-year loan, right? As an example. But if the goal is really to pay the least amount of interest over the remaining life of the loan, paying your current loan at 4% for the next 8 years versus a 30-year loan at 3%. So yeah, you've lowered your payment, but you're going to pay a lot more interest over the life of that loan. So that goal of paying off the loan or paying the least amount of interest is on the opposite end of the spectrum of lowering your payment.
Yep.
Right. And so you got to be thinking about what's the goal of the refinance, how much you actually going to save. Is it short-term savings? Is it long-term savings? Of course, the best of both worlds, Jim, is when you get both of those, right? You lower the payment and you pay less over the life of the loan, even if you're stretching it out a few more years than the current loan.
Yeah, and that's the one thing that's, to me, is a big difference about talking to Mike or not, right? Is talking about those things and getting honest answers, right? He'll tell you, hey, I wouldn't do this for you. It doesn't really make a lot of financial sense. He'll ask other questions people don't ask. How long are you planning? Like if it's a iffy, I'm sure Mike's going to say, well, how long are you planning on being there? One of the probably first questions. Are you planning on being there a long time?
Yep. Right?
Because all those things are important. So if you're thinking refi, you got to think of the one-stop real estate shop and Mike Rao from the mortgage firm, the mortgage guy. So
FloridaTalkRealEstate.com, FloridaTalkRealEstate.com, or call 888-973-7828. You'll find that hotline at FloridaTalkRealEstate.com.
Now, when you were talking about the interest rates and everything, and like how we've been at this low price and been pretty flat and calm seas for quite a while, just to give you an idea, you were saying, back 3 years ago, blah, 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 and it's true because the peak of interest rates for the last 4 years was November 15th, 2018. And we were at 494, right? So from November 15th, and I'm looking at this chart, it almost looks like a slalom course for skiing. It's just straight down on maybe a 45-degree angle, right?
Oh, you mean the downhill, not the slalom.
Yeah, downhill. Oh, I'm sorry. Slalom is flat. I'm sorry.
Slalom's, weaving back and forth.
Left and right. Yeah. So I don't know the ski jumper guys then with the ramp. Okay. But it's looking for not a steep one. It's looking more like a gradual 45-degree
Yeah.
continued downward trend until we got down to about 2.8. Really, it's 2.6, but we were only at 2.6 for such a blip of time.
Yeah, and
So,
it's funny if you look at those charts, Jim, you'll see like that downward trend started. What would you say? It's the end of 2018, kind of leading into 2019, and even leading into COVID 2020, we had been on a pretty sharp decline leading up to that year. You know what I mean? So it's kind of like you look at that and you'd say, well, you couldn't even spot COVID in there if you didn't know what happened.
True.
The way it was going down.
Yeah, because that's true. And the only thing is that when COVID, if you count like March, right? So March was right at the beginning. I don't know if everybody remembers. We were talking about it in January, but didn't get serious for the United States until like March. And March, we were at 3.65, almost a whole point higher than we are now.
Yeah, March was when I think if we think back, everyone kind of started around here. Getting very, very conscious of what was happening with coronavirus. But and then of course, refining in the early part of or the second quarter of 2020 they made it hard to refi. Remember, because it was we were just getting overrun with refis, and the whole lending. The lending institutions were like, "Holy cow, that's just too much paper. It's too much money."
I forgot they were shutting it down.
Yeah,
they were telling people, sorry, we're not taking your refi right now. A lot of the big box banks were doing that. And the other thing that happened, I forgot about this, is they were also like changing the requirements for like FHA financing and stuff. Remember, some of the banks were requiring much higher requirements than pre-COVID because they just didn't know what the heck was going to happen.
Yeah. So, I mean, it seems like all of that is getting back to normal, and rates are still low for whatever reason, whatever those indicators are that are keeping it that way. It just it happens to be the case. If you've been thinking about it, definitely we should talk. If your phone is blowing up with like your current lender saying, hey, there actually might be something to that, right? So it's worth investigating. Not saying call your current lender because you're almost never going to get a good conversation about it, but might be worth investigating.
Oh yeah, if you're like